Building a firm trading foundation. One of the most important factors we have going into a trade is that our trading pattern, the foundation, is solid. For me, this means that I have to have at minimum 3 reasons to be in a trade, to be looking for a trade, to be taking a trade. Sometimes I may take a few attempts at the same trade, but the setup that I'm considering as a whole must have at least 3 different factors that are supporting the reason to want to take the trade. Now, as far as the reasons, those can be a lot of different things. It could be based off of structure, it could be support and resistance, psychological levels, indicator confirmation, order flow, volume profile, divergences, you name it. You can have as many different things on there as you want. Here is a good example of a chart that we were looking at a few days ago and the way that we were looking at approaching the market. Now, there's a lot of different ways to jump in on this move, but one of them stood out in particular, and I just wanted to point out the blank chart first to see if anything really kind of stood out in terms of potential opportunities. And along the way, obviously, like I said, there are a lot of them, but there's one specifically, and I'll give you a hint. It's more in this area. How's that for a nice generic circle? In that area in terms of a zone of interest. So feel free to pause the video, but I'll close this chart and then I'll have all of our markings and everything on the next. All right, so here is the setup as a whole, and there's a lot of factors that I really, really like about this one. It's a fantastic opportunity for buyers to be jumping in and pushing the market aggressively higher. So one of the first things that stands out from a structural standpoint is that we have a spike in channel, meaning that the market rode higher and then formed an upward pointing channel. That is a spike in channel. And typically when those break, they like coming back to the beginning of where the spike in channel all started. That's what this yellow box here is. Along with that, we have a equidistant or repetitious move that has been going on from top to bottom of the largest pullback that the market has seen so far, aside from obviously this big one over here. This would be the next largest, was 0.33%. If we utilize that from the top down, that was 0.33%. It's right there. Along with that, this was a 3-press leg to the downside. So you've got 1, 2, and 3. And normally what I would like to see from that is for a structural formation of a 3-press wedge, but that wasn't even close. So as far as a structural point of view on that side of things, we didn't have much aside from 3 very nice measured legs lower. Certainly can't be upset by that. We also have a MACD divergence coming off of the lows, although very slight. You do have to zoom in pretty close to see that kind of divergence. And although it's there, it's not as optimal as something that I would like to see, but it is there. It's another compensating factor. And then we can dig in even further and see that there was a gigantic amount of volume control that came in there from before. And all of these combined, we also zoom out a little bit further, and we have one of our favorites, an L3, setting up to the long side. And this creates a massive zone of interest. It's not just one type of trader looking to come in here. It's sellers getting out with targets. It's buyers coming in on structural support. It's pattern buyers coming in on support. It's larger term pattern buyers coming in on support. Repetitious buyers coming in at support. All of them are stacked up right inside there. And that's where the hot spot is. Now, this is something that is easy to do in hindsight, obviously, but as you get better, you do find those entries in real time and you're able to actually utilize them for more continuation. Now, this one went, it strapped on the rocket boosters and went incredibly far. But these are the types of things that you're looking to do to create these zones of interest, to show where everything is stacking up. Because although you may still be wrong, right? I know that if I'm buying in this case, if I'm buying in here, I know that I don't have to risk that much. My risk only has to be down to here, maybe a little bit further. But where's the reward? It's huge, right? And it went a lot further. And that's the type of risk reward that you can utilize or look for when you're stacking everything in your favor in the same location. And that's why you see such strong responses there. You don't have to be right very often. In fact, honestly, most of the time you're probably going to be wrong because the stop is so small. But when you're wrong, or I guess if you want to look at it this way, if you're right 30% of the time, but you're winning 3 times as much as you're willing to lose, it still equates to very good traders math in something that is effectively, it should be taken every time. At least from a math standpoint, of course. So that's going over building a firm trading foundation. And when it comes down to it, when you're looking to take a trade, for you at least, what is your approach? Do you have a certain amount of rules that you have to have met, or do you just have a specific trade setup that you're looking for? As always, I love seeing that kind of stuff in the comments below, and I'm always looking to reply back to them as well. But that's going to do it. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next one, we'll see y'all then. Thanks.